morning, everyone. Welcome to the Stock Market Morning Prep video for Friday, May 15th. Well, we did have that pre-market strength, which followed through to the opening. Markets gapped up pretty high. Dow Jones gapped up just about 200 points. I actually hate when the markets gap up like that because usually there's not much going on afterwards. And you can see here, right around 12:30, we did get a little bit of a pop. We got these little tiny pullbacks, which is not really my most favorite way to get in long. I like to see a bigger, deeper pullback into a support area. But nonetheless, if you were in long, congratulations. But the markets are now at making new highs. We had the S&P cash make new highs yesterday. Where do we go from here? Well, it's a little tricky call here. We are at highs again after 3 days of just choppiness. The banks are doing and financials are doing quite well. And I mentioned that early on this week and last week. So what I want to show you is, actually talk about, as you know, bonds have been breaking down. And I think bonds are going to top this year. I do think so after a huge bull run since 1981. I mentioned that about 2-3 weeks ago. And any good rallies, I'm going to be looking to short bonds. And I mean good rallies, good movement up, quick, hard rallies. That's what I'm going to look to short. Aside from that, we're going to have that sector rotation where money's coming out of bonds and into equities. And I like that. That's going to actually put a bid into the U.S. markets, okay, into equities. Also, we have banks and financials starting to do well. When we have rising yields, banks start to make money. And when the banks make money, they need to aggressively lend because now we have the Dodd-Frank Act that came into play, the old Glass-Steagall Act, where now they cannot have trading as their income, so they have to aggressively lend. That eventually will put a bid into housing as well. The only problem is that housing is weak at the moment. We have equity markets making new highs, but the economy is not doing well. We have really bad economic data, and we had the retail sales numbers that came out, which, as we all know, the consumer is the heartbeat of America, right? If they're not spending, what is going on here, right? Well, I think that obviously, as you can see, markets rallied. Market participants love that because they think that the Fed's not going to move in June as far as raising rates. So, again, it's just going to have to be a wait-and-see type thing. But until then, I think we need to use extreme caution with this market because, as we all know, the markets are made to fool the masses. And it just seems too easy to keep buying the market straight up when I think something bigger is brewing. But until then, let's pick nice, high probability trades. Do not, and no reason to, hold overnight exposure unless you're trading in the overnights. A little different if you're up. But if you're not and you're holding large amounts of positions, I just think that's crazy at this moment until the market can really correct 8, 10, 15%. Then, when I do think that happens, then I think that'll be an interim low for the markets, and I think you're going to see much higher prices in equities. But until that market corrects, guys, I would be really nimble in your trading, all right? Let's just go on into the charts here. I'm not going to show you too much. XLF, banks and financials, looking good. And again, I wouldn't chase up here. But, pick some of the good banks that are coming into so you got a good accumulation in these names like the J.P. Morgans, the Citibanks, the USBs, the Wells Fargo, the Bank of America. And then a lot of the regionals are starting to pick up and starting to wake up too, guys. That could be a real good trade on any pullback, which I'm actually looking to do as well. All right? So XLF breaking out of this beautiful consolidation. This is very bullish, by the way, okay, for the last 3 months, and now we're starting to break out here. That could be a really good sign. What's not a great sign is, obviously, you can see we have low volume on this breakout, okay? So that's something we need to just kind of pay attention to. Spiders breaking out at the new highs at this beautiful ascending triangle. Again, a ton of chop. We haven't gone anywhere for about 7-8 weeks, and now we're starting to break out here. Don't listen to the pundits on CNBC. They say, oh, we had an outside day. We did not have an outside day breakout, meaning that the markets did not break out. We're still within range. Yes, we had an outside day from the previous day, but we're still within ranges of the highs, except the S&P 500 cash, which did break out. But remember, if you look at these charts, you'll see, if you look at a daily chart like this, we did take out that little high, but we're still within the high range here. So spiders did not make new highs. Look at the IWMs. Okay? Excuse me. We had lower lows and highs. We did break bearish symmetry. I like that. But we are nowhere near the highs here, okay, guys? So let's just really dissect this and be careful. Do not listen to the pundits on TV here, the news, because they really don't know what they're talking about. However, things are looking better, but we have the economy not looking so great. So we have market participants buying up equities thinking that the Fed's not going to move in June. All right. But if you look and you dissect secondary leader here, the Russell 2000 small caps, where's the risk? The risk on. This is not good. This is what scares me here, okay? This is just another big bear flag if you're looking at it. Now, although we did break above the 20 and the 50, right? If you take this out, all it is just a big bear flag here that's forming. Or if you want to say a small upward channel. But look, there's the flagpole, you know? So just, you know, be careful here. I'm cautious. I'm cautiously optimistic, I should say. Yeah, to the long side. Do I think the markets can go higher? Absolutely. Do I want to go short? No, absolutely not. I want to buy pullbacks in an uptrend. I would never go against the grain. But just use caution. Look at the transports. Horrible. This is just a horrible chart. And this is why I'm cautious. When you have a major leader here breaking down, the railroads just got decimated yesterday and a couple of days ago. What's happening here? This is not good. Where's the supply moving around the country? It's not. All right, so this is not a good sign. Can the one index move lower, take everything else lower too? Yeah, I think it's possible, but I'm not going to bet on it. I just want to see this back above the 200, and it's not. Here's the 200. It's been staying below that for the last several days now. We need to get back above it, okay? Diamond's looking okay, but it is a follower. It's not a major leader anymore. Doesn't have as much clout as the transports of the Russell 2000, but it did break back out of the range here of the symmetrical triangle, looking good, looking constructive here. Okay, and then you have your Qs on your you have your technology looking higher, but again, way off its highs. All right, so just quick recap: we have bonds are moving lower, but they did rally a little bit. That's a good sign when you have money flowing out, do have sector rotation out of bonds and into equities. I do think that bonds will top this year. I do like the banks and financials that are moving higher. That's a good sign as well. Technology doing the same. I like that as well. That could put a bid into equities where I think that maybe, just maybe, again, an assumption, not a trading call, markets move higher. They run up real hard, capitulate upside, and then I think we roll. I do see a market correction this year. Timing is the most important part of it, and I don't know when. That's what I'm going to be looking at the moment. And I'm going to be studying quickly all of these charts that are coming into play, and I'm going to just watch them accordingly. Be careful if you're swing trading. I would not hold a lot of overnight exposure, although it's been working out. Kudos to everybody that are doing it. I just don't want to take that risk with the markets at extreme levels at these prices. So use a little caution, and I really just pick the highest probability trades there is out there, guys. And if you don't see anything, take a step back and let it come to you, all right? Have a great day. Enjoy the weekend, and we will speak to you on Monday.